first, let's begin with our market panel. Brooke May of Evans May Wealth and Sam Stovall of CFRA Research. Welcome, both of you. Sam, you buy this bounce back after all this volatility, S&P back above 5,600?
Yes, I do, John. I actually looked on a closing basis going back to the inception of VIX in the early 1990s. And whenever we've been in a pullback mode, meaning a decline of between 5 and 10%, we've had that happen 6 times. The market did not exceed the 10% threshold 4 of those times. And when it did in the remaining 2, we were down only 10.2 and 16%. So probabilities would indicate that because of the sharp sell-off 2 Mondays ago, that's what really sort of shook the loose hands off.
But, Brooke, can you buy a stock like a Palo Alto Networks, or I guess like a Netflix or an AMD with new money here? I mean, good for you if you stayed in this market and you weren't shaken loose by the volatility, especially over the last couple of weeks. But where do you put new money to work?
We still like big tech. We think big tech is leadership. And when you look at companies like Palo Alto, you can get it right now for about 10% off of the high. They've had a few disappointing earnings announcements in recent quarters, but that's because in the near term, they've had pricing concessions to be able to lock clients into their bundled offer. That makes those clients and customers sticky, and that'll bode well for them in the months and quarters to come. So we think that company by company, you can find some good deals out there right now, and it's not too late to get in.
So, Sam, Fed or NVIDIA having the bigger influence over markets over the next several days?
Well, over the next couple of days, it's going to be the Fed because NVIDIA is going to be after that. But I certainly believe that Fed Chair Powell is going to sort of remind us of what he had said during the press conference before, not really add anything new, but certainly not take a more hawkish stance. I think the Fed will continue to be slower to lower interest rates. And as a result, we're looking for 3 rate cuts, 25 basis points each in September, November, and December, primarily because they want to signal that, yes, they are ahead, maybe not ahead of the curve, but at least on top of the curve. They're not behind it. But at the same time, they don't want to be too aggressive in terms of removing the pressure before, in a sense, the fire is out.
Sam, is that enough, though? I mean, I say next several days because I'm trying to include the NVIDIA window. But there have been some people saying, well, if the Fed isn't really aggressive about signaling rate cuts, then the market's going to be disappointed. But I don't know. It seems like the Fed's been pretty right to be disciplined up to this point.
And they've done a good job, I think, of telegraphing that, having voting members and non-voting members say that they probably would be looking to vote to cut rates in September. The real question, however, is not just the timing, but the magnitude. Will they start with 50 basis points and then have 225 basis point cuts thereafter? We still believe that we'll see 4 more in 2025. So I think the real question is, like the sprinters in the Olympics, how quickly will they come out of the gate?
And Brooke, to the questions on Palo Alto Networks, I imagine it has a lot to do with the guide, and it's been a mixed bag in reaction that we've seen to earnings this season. What do they need to show, perhaps on CRPO, and how that pipeline is building?
As we've seen, companies that earnings have been priced to perfection, and companies are expected to beat on earnings, on revenue, and on guidance. And if they're not able to deliver on all of those, it's been a disappointment. With Microsoft, for example, they had great earnings overall, but their cloud revenue was a little bit of a disappointment, and the stock sold off 6 or 7%. So we need to see Palo Alto come in and demonstrate that they're going to be able to take market share from CrowdStrike, in addition to some of their other competitors, and be able to grow their revenues in the quarters to come.